We have just in the last few days or so seen the Aussie dollar come back to life and not on a relative basis is faring as well as any other currency against a falling US dollar. So that's really, I think, explained why we've gone from close to 60 cents up to 63 cents. And the US dollar is really being subject to two really strong downward forces at the moment. One is really what we call a loss of US economic exceptionalism, whereby the economic data that we've had since the beginning of the year suggests that the US economy is no longer travelling nearly as strongly as it was late last year. So that outperformance that we were so used to seeing in the last couple of years has pretty much evaporated. And at the same time, some of the policy choices that we've seen coming out of the Trump administration have really started to undermine global investor confidence, if you like, in their faith in the US economy, but the US dollar as far as the preeminent reserve currency is concerned. And so we've seen some pretty meaningful outflows from all parts of the globe out of the US dollar, and question marks about whether, in the long term at least, the US dollar is going to retain its sort of preeminent reserve currency status.
Is it clear to you that those moves in currency and bond markets are giving Donald Trump pause?
Absolutely, and I think we'd have to look at the US bond market more than we look at the US equity market. If you remember when Scott Bessent, the US Treasury Secretary, came into his position, he made very clear that one of his ambitions was to see US long-term interest rates coming lower. And in fact, in the last week or two, they've actually risen from around 4% to around 4.5%. And we've seen this very unusual coincidence where we've seen rising US bond yields, but a falling US dollar. And that is very atypical in history. And I think it has freaked out the Treasury Secretary, but also President Trump to some extent. And I think that's why we saw, for example, the decision late last week by President Trump to put a 90-day hiatus on the April the 2nd Liberation Day tariffs that he unleashed, because it was certainly adding to those sort of investor angst, if you like. So if the bond market is saying yields are going up, but it's because foreign investors effectively are demanding a higher return to continue investing in the US and US assets, I think that really sent a really sort of warning sign, if you like, to the US that these policy choices that they were making had some unintended consequences that ultimately are going to blow back to hurt the US economy more than they're going to hurt the rest of the world.
Well, who knows what could happen later today or tomorrow, but right now, is it looking good for Aussie exporters, which might be benefiting as a result of this increasingly fierce US-China trade war?
Well, certainly levels of the Aussie dollar below 60 cents, which we have seen briefly, tend not to be sustained for very long. So I think exporters, are certainly taking advantage of these very low levels. Obviously, it's causing a lot of pain for importers who are primarily paying for goods imported from the rest of the world in US dollars, and it potentially has some upward impact on inflation here if we're having to pay more for goods coming from overseas. So I think this little reprieve that we're seeing in the Aussie is certainly welcome news as far as importers are concerned. But one thing that isn't happening at the moment with this Aussie recovery is it's still incredibly weak against a lot of the European currencies and against the Japanese yen. So anyone looking or heading to the Northern Hemisphere for their summer holidays, I'm afraid, is not going to be getting much relief as far as what things are going to cost in Europe for the next little while.
It is probably tough to be in the forecasting business right now, given the volatility you've been talking about. But where do you see the Aussie dollar heading in the short and medium terms? Your best forecasts.
Well, our best guess, and can I caveat that saying the margins of error around them are exceptionally wide, in the sense that policy uncertainty everywhere is going to remain highly elevated for a long time to come. But the forecast that we've had since the beginning of the year, do have the Aussie sort of creeping higher as we go through the year, maybe getting north of 65 cents, maybe mid-year, and a little bit closer towards 70 cents at the end of the year. But that reflects the view that this US dollar, or that the US dollar is going to continue to weaken as we go through the year for the reasons that I've mentioned, and US economic underperformance is going to continue, as well as these concerns, as I say, about whether the US dollar really is the safe haven that it's traditionally been. But the downside risk really comes if we do see a sharper deterioration in the outlook for global growth and the global economy, that historically has always played badly as far as the Australian dollar is concerned. So we still have to be mindful of the downside risks, even though ultimately we think that US dollar weakness will lift the Aussie dollar up north of 65 cents.
Ray Attrill, good to speak to you.
Thanks, Kirsten.